Bismillah ar-Rahman ar-Rahim. In the name of Allah, the Beneficent, the Most Merciful. I'd like to welcome you, dear viewers, to our program, Contemporary Issues. In this segment of our program, we are shifting now to the area of economics. Economics, a field which Islam addresses. There are laws within Islam which govern human economics, how their economic dealings should function. When we look into Islamic legal requirements of business deals, etc., sale, purchase, these type of things, trade, we find that one of the basic principles is that it should be free from deception. Anything which involves deception, where you're deceiving the buyer of really what you're selling, he thinks he's buying one thing, you're in fact selling something else. However this may come in all the different forms, from Islamic perspective, all of that is forbidden. The other basic principle we can see there is that the issues of interest, where business dealings involve interest, this is not another area where things, again, are strictly forbidden. So what we know today as modern mortgages, people buying home with bank loans, and you have to pay back the bank over this period of time and this kind of thing, or taking out loans for cars or a variety of other purposes where you end up paying back the money plus an additional amount. This has been forbidden in Islam. And really it is not something new, in that you can find even in the Old Testament, in ancient beliefs of the followers of Moses and others, that interest is forbidden. We find in Deuteronomy 23, verse 19, "Thou shalt not lend upon interest to your brother." Interest on money, interest on victuals, that's food or provisions. Interest on anything that is lent for interest is a basic prohibition. However, and this has been understood, however, this prohibition for the Jews, there was a modification there. In verse 20, it goes on to say, "And to a foreigner you may lend upon interest, but to your brother you shall not lend upon interest." So interest became, for Jews, forbidden to take from themselves, from each other. But it was okay to take it from the Gentiles, the others, right? And the prohibition of interest actually existed in the Christian world, right up until the Middle Ages, the 13th, 14th century. Otherwise, prior to that, it was banned. We find, Shakespeare writing about the Merchant of Venice, the pound of flesh, individual lending an interest and seeking a pound of flesh in return for those who couldn't pay it. This idea, this was the evil Jew. This is what how he was functioning, taking people's flesh even, so it was opposed thoroughly in Western society. But eventually, though the people were able to influence the religious beliefs, the economic segment was able to influence it under the Jewish influence to the degree that they introduced it eventually, interest on a low scale, and eventually it spread until it became the foundation of Western economics. Interest dealings became that foundation. However, in the 70s, of course, Islam totally prohibits interest. Allah makes no uncertain terms about its prohibition, even talking about the fact that people will compare it to trade, right? That they will say that trade is just like interest. Interest is just like trade, really no difference, You lend somebody your property, they pay a fee for it. You lend somebody your money, they pay a fee for it. It's just the same. But the trade in money, Allah says, is devoid of any good. It's cursed. Whereas proper trade is blessed by Allah. So dealing in interest is forbidden for Muslims. And Muslims have functioned economically over the centuries without dealing with it. However, once the Muslim world became conquered by Western civilization, mainly out of Europe, England, France, Germany, etc., conquered various Muslim lands, Holland, Indonesia. Then they introduced with their conquest interest-based governmental systems. And the banks were introduced into the countries. And interest and the belief and the practice of it spread. With the revival of Islam in this century, we find that the proposals for Islamic banks, the alternative, came up, especially in the early 70s. The concepts were being proposed, because things had been worked out, the plans for it had been identified. King Faisal's son or brother, Muhammad al-Faisal, working on it. When the idea was first broached in the West, the Western economists, etc., they scoffed at the idea. This is ludicrous. The idea of banking without interest? What kind of bank is this? It cannot possibly work. Though, in their own books, in their own theories, they will tell you that the lower the interest rates, the healthier the economy, the better the economy is. The higher it is, the weaker the economy. This is well known. But the idea of zero interest, you see it getting lower and lower and lower. This economy gets better and better and better. But the idea of zero interest, no. This could not be dealt with. They didn't want to deal with it. That idea was forbidden. Why? Because the elements that control the banking systems of the West, they would be put out if they shifted to banking without interest. So they, keep that concept in there strong, and they continue to teach it, absolute necessity, whereby people can just live, no effort on their part. People take their money, they have to pay back more money. No effort involved here. Well, what we find today, after some 30 years have passed, that the majority of the major banks of the West now carry Islamic portfolios. They offer business without interest, banking without interest. They're offering it now. Bank, all the various big banks, Bank of London, etc., they're all offering it now. Why? Is it just to capture Muslim money because they don't want to lose their clients? No, because a bank is not going to do that just to maintain its reputation. No, because it's not going to involve itself in what it sees as clear financial loss. The only reason why they're getting involved in it is because they have seen its successes. The Islamic banking has reached a massive state of success. This is what was thought impossible has actually been implemented. Today you have more than 200 Islamic financial institutions worldwide managing funds of over 150 billion US dollars, And even with its strict codes, Islamic banking is growing at a fast rate of some 15% annually over the last 10 years. In recent years, Iran, the Sudan, Pakistan, and others have banned traditional commercial banking, based on interest, and adopted Islamic models. Of course, Pakistan is not complete as it has been in Iran and Sudan, etc. But more and more countries are broaching this idea. Malaysia is experimenting with it also. Islamic banking is developing there quite strongly. And we find Muslims, wherever we go, looking into this, calling for this as an alternative to the other banking, is interest-based banking institutions. So how does the Islamic bank function? Well, there are different means by which the bank maintains its money. One of those means they refer to as murabaha. You need to buy something, the bank goes and buys it for you and sells it to you at a higher price. Buying commodities and selling them, right? Based on demand. Secondly, you have what is known as musharaka, where two financiers, they're partners, they come in, they put their time, effort, money together, and they share the profits proportionately. Then we have what is known as mudaraba, where, again, two parties come together, but one is bringing in all the money, the other one's making all the effort. And they share proportionally, again, the profits. But in all of these cases, they also share the losses. This is the point which makes them different. That if there are losses, they all share in the losses. In the case where it is a matter of one person providing money, no effort, and the other one just providing the effort, obviously the financial loss will be borne by the one who put in the money. Whereas the one who put in the effort, of course, it will be the loss of the value